Hello, Trade Pros, sound check. 1, 2.
Is it live?
Yeah, it is. But the mic's not moving. This is what I was worried about.
Hold on a sec.
Can you guys hear us? Sound check 1, 2. Hi, Roni. Sound check. It doesn't look like the mic's moving, but okay, you can hear us. Perfect. All right, awesome. Welcome, guys.
All right, let's go. We ready?
Welcome to the YouTube Live. We're excited to have Anthony Drager here. Came to visit us from Chicago. We got some big news that just hit the wire. The camera's facing us. Our trading monitors are here, so we're going to answer your questions as we go along. But huge news out of Donald Trump at 12:25 as we were recording an episode of Something Special. Can't tell you yet. But doesn't think we need a U.S.-China trade deal before the 2020 U.S. election. People know we're doing a great job. That kind of spooked the market, big dump. So let's kick it off, and we'd love to turn to you guys some questions. Let us know what questions we have. We'll be here to answer them.
Can I add one thing? So with this news that came out, the first thing I think about is what's next. So the what's next could be negative. Now what's next could be positive. Right now they had what George just said about the China delegation not going to Montana or canceling that. And then Trump follows that up with U.S.-China trade deal might not have to be done until 2020. Obviously, that's where all the bearishness came from. And I'm not saying we get this today, but the unwind of that. And that's how this trade war has been going, where the next comment could be, oh, we're still going to meet. And we're still pretty positive that we can get something done. I don't know if or when that comes, but don't let that surprise you, because that could be kind of a logical progression in the way that this story and driver has been running. So negative could be another negative comment, or it could be the unwind of it and say, hey, you know what? We're still going to meet and we're looking forward to it.
Awesome, man. Hey, Will, what's going on? Wazir, Ernesto, Maurizio, Will from sunny Cancun.
Maurizio, is he Italian? We'll answer his questions first.
You got a bias going here. Good afternoon, Craig. We'd love to hear some questions from you guys. So we set this live Q&A session, so you can ask us anything. Take this opportunity. Anthony's in from Chicago. He's on our channel. Former floor trader, prop trader, and all-around Italian stallion.
Actually, you want me to put my hood up?
I think if you put your hood up, they'll like you more.
Yeah, I don't want to mess my
You look
hair
more relatable that way.
Maybe at the end. Do they see? Could they talk to each other through there also?
Yeah, everyone sees the comments. So get some questions in there. You might be asking what the STFR stands for. Somebody might be wondering that. Sell the, you know what, rip.
What?
How do you know how to interpret news, says Craig. Drager, you want to take that one?
Well, yeah. I mean, the thing is that when I started, I was a floor clerk, and you had an idea what numbers were important, what they were going to mean to the market you were quoting. Now, as a trader, I started at a prop firm where there was a guy who did a morning briefing every day at 7 a.m. And he would put together a morning wire you'd pick up when you got there. And you wouldn't read the whole thing, you'd read the high points. But in his briefing, he just by default, you learn what was important. You learn what could have been said that was bullish, what was said that was bearish. And he taught us indirectly, not as an economist, because he was a trader with like a degree in economics from the school he went to. So he was perfect for a guy like us, like you guys, to educate as to what means something, or even more importantly, this doesn't mean anything. So what George does a great job of, what I do with people as well, is first of all, know what's driving the market, what's important. It's usually always the Fed. And now over the last year or so, it's been U.S.-China trade deals. They're going to be dealers, they're not. What's really unique about the trade deal, or lack thereof, in a trade war, is that it's not something for 20 years that I've ever traded through. In fact, in modern history, we really haven't had a real trading war. So that creates a lot of uncertainty as what does it mean? How is it going to affect our economy, their economy, the global economy? All these people on TV and all these economists, they don't know, because there's no good precedent with a trade war, especially between the two major economies like the US and China. What I can say is what the market does and what it wants. What it wants is a trade deal. And they don't care about the terms, they care about the lack of a trade war that would come from a trade deal. Does that make sense? So going back to whose question is this again? Great. So you have to know what the news is and if it's going to be anticipate. All right, I know no trade deal or any negative talk is bearish. I don't have to think about it. I could tell you that as soon as that headline hit, as far as the delegation isn't coming to Montana, it's like, well, that means to me, without even having to know anything more, that they're not going to buy ag products, and they're supposed to. It's priced in. They were going to do that. You have to take that out. It's bearish for stocks. Then the next thing is Trump comes out and says, oh, we don't have to have a deal till after the 2020 election. Well, that delays something that the market's hoping to get. They're meeting in early October. They're hoping to get one. So right away, you interpret that as being bearish. There is no thinking. You should know where the market is when that story came out, what it went to when you got it, and what to do as far as reacting. Is it still close enough to where it started to sell it? Then sell it. Because if it's news driven, it should go your way right away. If it doesn't, you can get out. So you automatically know what you're going to manage or whether or not you're right or wrong. These are the best things to trade once you get better and good and professional and interpreting it. I'm not the smartest guy in the world, but I'm smart enough to know that.
Hey, you opened the window in the meeting room and now a fly came through. I was trying to squat it. Let me take crack this question because I have something to share with you as well on that.
That I pretty much answered it all. There's nothing to add.
Bye, guys. In terms of news, a lot of times for me, my best trades have been taking the trade before I even know how the news is going to impact something. So obviously trade war news, you got to be up to speed on that in order to be reactionary. But for other news items, just hit the wire. There's a lot of times I've done the trade and later on look to explain what the news driver really was, because at the end of the day, there's two things. Do you want the trade or do you want to know what the news meant? And a lot of times, by the time you know what the news meant, the trade's already over. So that's one aspect for me. But yeah, in terms of trade war news, absolutely, Anthony's right on. You got to stay up to date with that and know how it's going to impact. And most importantly, what's been priced in up to now and what's the new event that's happened. Because we're not pricing in the news. It's the news in comparison to the expectation of what's going on. That's a good question. Let's get another one here. We're getting some more coming in. How do you know? Oh, we already did that one. What was the breakthrough of actually trading consistently?
Good question. You want to go first or?
Go for it.
Yeah,
It's Kelvin.
Calvin Klein.
Yeah, Kelvin.
That is it. So Calvin Klein, that whole joke is, do you want Fruit of the Loom underwear or Calvin Klein? You don't have to be too perfect like Calvin Klein models, but you don't want to be. Well, let's not go with that anymore. Let's keep it clean, George. The whole thing is, you get the more you are objective to knowing that what happened was supposed to happen based on what you were doing, and it didn't feel like a good guess, or that you got lucky. Now you're able to build on it because you're confident. You got to be consistent before you're confident, but you got to consistently say, hey, you know what? Here's why I'm bearish. All right. And here's what's going to get me short. And then when that happens, you've seen it, you felt it, it works with a high probability and you got confident. Now, what are those things? It can't just be anything. Like what gets you bearish can't just be anything. What gets you short can't be anything. But when you're using any semblance of order flow and correlation, those are pretty objective ways to value the price of anything. So if I'm bearish in the ES and the market right now is trading on fear and the bond market rallies and the NASDAQ gets hit right at a breakout opportunity, I get short knowing what I'm going to manage. And all of a sudden it works. And I don't feel like, that's a surprise. You know, I'm surprised that this worked. I knew where I was going to get out if I was wrong. I understood the timing of how long it should take to be right. But I also knew that I used correlations, right? The cause and effect. And then maybe order flow where buyers came in. I'm bearish. Buyers come in and we can't rally. Buyers come in and we can't rally. And I want to get short. And we just get underneath where those buyers came in. And then the bonds rally and the NASDAQ breaks. Then I don't want to say a perfect storm, but now I have the ingredients. So the cake should rise or the bread should rise. And if it doesn't, fine, I know what to do. So don't be nervous or mad about being wrong because that's supposed to happen. You're going to have the confidence and the skills to manage that risk, but know that you had a progression that makes sense. Does it make sense to go and buy a plane ticket and know you got one that was cheap when you went to Travelocity? Yeah, because you compared it to other airlines that went to that city. That's how you kind of value the price of anything. Integrate that into your strategy and your decision-making process. So turn the corner is part of this question. How do you know when you turn the corner? When you strip out randomness and good trades don't feel like good guesses. All right. If you were able to get short up around 14 even and the market broke to what was it, 90? Not that you took that whole 25-point move, but you caught some of it. Was that random or was that skill, knowing how to interpret news, knowing how to play it from the right side? If you're looking at you're like breakouts and you identified a consolidation for the right reasons and you want to get short near the bottom of it because buyers at the bottom of it no longer are holding on to it and the NASDAQ breaks and the bonds rally and that correlation's working well and you get short and it works, does that feel like a good guess? Of course not. So have expectations, but don't be afraid to take losers, because what will happen is you won't take trades and then you'll hold on to losers when they become losers because you didn't expect to either take them. And that fear created the inability to trade. You got to make decisions. You got to be fluid with them. You can't care about losing trades. If you're worried about being wrong, you'll never be good at anything.
Yeah, it's a great answer. I just put a short on, so I got to monitor his position. It's probably not. Let me. To answer your question in terms of consistency for me, I'll tell you personally what made me turn the corner. It was Trade Pro education. What it really was is letting go of the expectation. So I came into business with a lot of expectation, saying I expect to make this much money. And the problem with that is that when you're having expectations, if you expect to make $1,000 a day, but you're just starting out and you only have a $300 profit, that's a miss in your mindset in comparison to your expectation. But if you were to instead look at that and say, hey, I learned something today and I got paid, that's actually a much more positive reframe than the pressure that we tend to put on ourselves. So for me, when I let go of the expectations that I have to make a certain amount every day, this is not a 9-to-5 job, this is a variable income business. When I let go of the expectations and stop judging myself in accordance to what I wanted to make and instead looked at, hey, what results did I create? Did I manage risk well? Am I progressing? Instead of achieving that large target in one day, 1 week, I started to celebrate the small wins along the way. And that's helped me greatly. That took the pressure off me to perform and instead reframed it to celebrate what I'm creating, whether it's a good day or a bad day. If it's a losing day, I get to learn from it. If it's a winning day, I still get to learn from it and I got paid for it. So for me, that was the breakthrough. It wasn't an indicator. It wasn't a system. It wasn't a strategy. It never is. The breakthrough is always on a psychology base. So that's a great question. How many indicators are you monitoring and how many have you come into play before you pull the trigger on a trade? Thanks, brother. Will, you know how we trade. Let me just move my stop to break even. I try to get off a short at 97.75. Now I'm going to break even. Why did I do that? I saw some sell imbalances there. I mean, we saw a lot of news, big sell off, and I wanted to catch a piece of it. And I know that
Don't make fun of me.
I'm not.
I had glasses.
Nice glasses.
Thank you.
I love those glasses.
All right.
Support them. So the question is, actually, Maurizio said, can you please describe which charts you use with tick level and what you look for as you prepare to execute the breakout strategy on the footprint? Maurizio, that's a very advanced question for YouTube. Is this the Maurizio that's part of Trade Pro? Should I get paid here, Drager?
But before you get into that, well, I always get out of something, but
Look at that. You see a buying balance starting to come in?
Yeah. Well, here, getting back to your trade, you were already bearish because of the news and you felt like this was just a pullback and it was getting a little expensive. Okay.
Yeah, took the profit.
So the couple things that he has to remember, he's not completely in the zone. He's answering questions. He's on camera. This isn't the best kind of disposition to be in.
That's right.
He knows what he's doing. That's why he just kind of reacted diligently. But let's say he had 20 on. He'd be an idiot for putting 20 on because he's not in the right frame to manage that trade. He's distracted. That's why he didn't put 20 on.
I did a one lot.
Yeah, you couldn't, you could only be great at one thing at a time. And to try to be great answering questions, helping people, and then have big positions on, listen, anybody who says they do that, they're probably deceiving you at some point. You got to be objective, which means you should trade. You should have something on when you're helping other people, but you also have to realize that you can only do so many things great at once. And that's why he managed it better, because it was smaller instead of.
Yeah, honestly, I put one lot because I feel like I missed out on the trade. But when you do things because you missed out, you get in trouble. So I put one on. I got a chance to move my break, stop the break even. I got paid on 2 ticks, which is $25. So it's not big exposure. But another question is, how do you know when to enter a trade when monitoring order flow, especially after news events like Trump's tweets?
Well, here, order flow is always that balance of imbalance. So it's like orders coming in that get filled, orders that come in and don't get filled. So orders that come in on the buy side aggressively to try to get long. Number one, most people educate and learn order flow the wrong way first. Order flow is simply identifying buyers and sellers. And when there's some flow on one side and they aggressively buy it and it can't go up, that's invaluable information to me. That's like a lie detector for interview. If a detective is good at his job, he knows how someone acts when he's telling the truth, and then he knows when they're lying, how they act. And they could start to glean the proper information. The same thing for anyone that's trying to, a poker player, right? They're good at those tells. So order flow could become a tell. What should happen is not happening. When he has a good hand, he acts this way. He's not acting that way. He's bluffing. I can now make better decisions on my hand. If I'm trading, the market does lie. You know that saying, the market never lies, or the market's never wrong? In that particular moment in time, it's not wrong. But here's a great example. A buyer and a seller agree on price. Does that mean that price is fair? No. When they do it in a bank, when they do it for a house, an appraiser comes in and he says, well, buyer and seller agreed at a price of 400 grand. This house is not worth any more than 350. That thing called a bank comes in and says, nope, that price is too high. Yeah, but a buyer and seller agreed on it. Too bad. They want my money. It's only worth 350. Another appraiser comes in. Yep, 350. So that's when price is expensive. It happens in markets. When is the market lying and getting too cheap or too expensive? Now, George thought it was getting too expensive. That's why he got short. For me, when I see a flow of orders that come in and it doesn't do what it's supposed to do, so a market rallies from here to here, right? And then buying comes in, and then it doesn't keep going up, and I want to get short. That's how I use flow to see a breach of buyers that come in. Now, if you get knowing where you're at on the map, George talked about buying coming in, but buying coming in after it broke is different than buying coming in after it rallied. So keep that in mind. Where are you at on the map? Are you in Maine or are you in Florida? If you're in Florida, it means you came down. If you're in Maine, it means you went up. Or you're in the Carolinas, you're in the middle of the range. Know where you're at in reference to where the market came from, because you get a lot of other short time frame traders that if we just came from here and we're down in here, there's a lot more people better than you short at a better price than you could be. So if you sell it down here, fine, but you better hope that it goes sooner rather than later, or you not better hope, you better anticipate you could be wrong in this rubber band. So you want to be less patient in that trade because you're selling it in Florida, so to speak. So the flow of orders is not just when they come out, where they come out. If a market rallies and buying comes in and it can't keep rallying, maybe I want to get out of a long position I'm in, or I'm using that to maybe execute a bearish opinion. Does that make sense?
That's great. That's awesome. I got one to tee up for you that I think you'd be perfect for. Craig's asking good questions. What'd you have for lunch, Craig? Whatever you had, it's helping out. Is stop hunting for real? And if so, how do I trade around it?
Well, here's how you anticipate stop hunting. That's one of my, did he say that because he watched one of my webinars a long time ago? I had a webinar called Stop Hunters. You were supposed to be a stop hunter. As traders, we're stop hunters. Detectives do police work. What are they? They're hunting for bad people, for suspects, right? To bring them to justice. If you are a deer hunter, you're hunting deer. We're hunting stops. What are stops usually placed for? I don't know about you, but when I put a stop in, either mentally or mechanically, what's that?
If you want me to show a chart for an example, let me know. I'll turn it.
No. Well, when people use a stop order, they generally use it to get out of a position, and they generally use it to get out of a losing position, right? Whether it's a mental stop or a real stop order. So buy stops are above the market to exit short positions, and sell stops are below the market to exit long positions. I know you could use stops for other reasons, but Most people use it to exit a position and to, I know you could exit it for, a smaller winner, but most of them use it to exit losing position. So how do you feel when you're in a losing position and you're long from here and the market comes down? You like the hand gestures? You're making fun of me.
I'm doing the faces. You just how do you feel? I did the face.
Okay.
So I'm just illustrating here, bro.
I just do my face.
I'm trying to throw you an alley-oop.
So the market, you're long from here, market's coming down, your stop loss to get out of this long position, sell stop down in here, it's getting closer. How do you feel? You're getting more mad, you're getting more anxious, and then it comes back up to you're not doing the face anymore. So it comes down close to your stop loss. Now it comes back up. Now it's break even. Now back to your stop loss. Doesn't fill it. Back up to you. Now it goes up your way a little bit. Not yet to your profit target. You can't get it. You almost got it. Now back down to a break even. Should I scratch it? And then it comes back down. Finally stops you out. You're out. Then it rallies 10 handles. It went right where you thought it was going to go, but you get stopped out and you dealt with all that emotional capital. Now, the market doesn't give an SHIT about that stop or your stop, but if there's a lot of stops collected at that area, it becomes a natural magnet. Why? Because you, as a long, have to sell it. You want to sell it higher, but you also are willing to sell it at your sell stop, correct? Well, when you have a lot of sell stops there, you have a lot of people who are long. You have a lot of people who have to sell it. You have a lot of people thinking about what should I do with all that emotion that he just went through. Should I sell it for that break even? Should I sell it for a profit even though it's not fully what I want? Maybe I should scratch. It's coming back. Now I'm just going to leave it. But you're a seller. And all that selling is a self-fulfilling prophecy. It goes to where all the sell stops are if there's a lot of them. So we're supposed to be able to, with the skills we're creating and working on and refining, to try to come up with probabilities of where there's a collection of a lot of stops. So we see that dynamic play out. All right. A lot of sell stops. I do not want to get long till they clear them. Why? What happens when you clear a bunch of sell stops here? They're always attached to a lot of resting sell orders up in here. Watch what happens when these go away. So do these, right? These go away, those go away. Isn't it easier to go up when there's less sellers above? Yes, that's what's keeping the market from going up, too many sellers. When they get canceled, because these got filled, you clear a path to go up. So the better you are at accurately assuming, I use the word accurately because it's not just an assumption, but you can't use for sure. You know, for sure there's sell stop. But when you're good at accurately assuming where there are buy or sell stops, you're going to be better at finding breakouts, seeing where people are nervous, seeing where people are going to puke. All right. And I could get into a whole nother side of this answer where once the buy stops got elected and the market ran, generally it comes back and uses that buy stop area as support and re-rallies off of it. Why? Because the jerks that didn't get out of their short position wish they did, right? They wish they'd had their buy stop here because it ran another 4 points against them, took all that heat. Now it's coming back and they're like, let me just get out where I should have got out originally. Let me out here. And they got their resting bid order where all the other buy stops ran the market up. So you get all those people dying to get out of their short position. It's all resting bids. That's the definition of support. Buyers who have to exit a short position creates the best support in the history of support. It's that simple. And if you don't know that dynamic, if you don't know that buyers who have to buy it because they're short, then they're more emotional than people who have to buy it because maybe they want to implement or initiate a long position. I call it the baby bird story. I'm not going to tell you the baby bird story today or right now, but the baby bird story has to do with baby birds who are some of the most helpless creatures in the world because they have to depend on mommy to get fed. And if mommy doesn't come along or if mommy gets killed by a hawk, those baby birds will die or they'll fall to the street and get run over by a car. Baby birds are the same as retail traders who can't get out of losing positions, who are stuck short as the market rallies and they're dying to buy to get out. And they're all trying to buy in the same area. That's the great support. So you want to be the hunter or you want to be the prey? I don't know about you, but unless it has to do with my romantic life, I want to be the hunter.
You want to be the prey in your romantic life? Oh, that's,
you never know.
You heard it here first. That's good.
Sure.
I'll add one thing that that's a phenomenal explanation of the dynamic of stops. To me, I always think, what moves the market? Limits or market orders? Market orders move markets, right? And so the question is going to be, where are those market orders? And the way you could see that is if there's any degree of buying and the price can't go up, then that means that those buyers are probably rethinking that position and are going to get stopped out. So if there's a lot of buying and the market can't go up, sell stops got to get cleared to the downside. That's where the liquidity or the market orders are waiting. So I was thinking of that position. A lot of people would interpret that as, hey, there's a lot of buying and the price is hanging on in a high here, let me buy. But that's actually the worst time. Because remember this, if you're buying but the price isn't going your direction, you're not getting paid. So now you're starting thinking about selling. Therefore, it's inevitable sell stops get flushed. Great question.
Ask the Noreen's question. That's a good one.
Yeah, one more before.
I'm sorry.
Yeah, no problem. Taxation in Canada. You want to get this one for futures trading?
It want nothing to do with
Alright,
Canada.
I get this one.
I like Canadians.
Since I get taxed on my profits in Canada, I can answer it. Always consult a tax professional. I'm not licensed to give you tax advice. And in Canada, there's two choices. You could be taxed as income, from which you could expense all of your trading expenses. The downside to that is income tax is higher, or capital gains. So if you make 500K trading futures in a year, the beautiful part about futures is it's capital gains. It's not taxed as income. So only 250 is subject to tax, and of that, then you go through the brackets. I mean, there's different ways. Consult your tax professional. If you got a more sophisticated tax structure, your tax or accountant and lawyer could help you set it up. You should look into a corporate account. That's where the benefits get really good, but then the costs are higher because you got to pay pro fees. All right. When will the fall winter volatility increase for the yes? I don't know. I'll let you know when it happens. I'd like that too. I want to see some more trades. Who else? You said Noreen's question. Noreen, you still around? Oh, Naren.
Naren.
You threw me off.
Noreen. I said,
I'm looking for Noreen. Naren says, how do you cope with trading against the high frequency trading algorithms reacting to fast moving markets faster than humans can? So robo traders.
Right. I don't. So I don't compete with them, right? I don't try to. They move, 5,000 times faster than the blink of an eye. It was something I remember reading over 10 years ago. High frequency trading is taking the skill of going for just a tick at a time, and they use all the speed to front run big orders. So let's say it's Apple, and Apple has a big 100,000 share block order. Well, they've been able to route where they recognize that buy order and fly past it and buy Apple ahead of those buy orders. So those buy orders rally the price, right? You could trade with your toes if you had that information, and high frequency allows them to do that. So don't try to compete with them, because things are moving too fast and these algorithms are stealing ticks here and there. So if you're just trying to play for a tick or two, you're in trouble. Now you might end up playing for a tick or two. If I'm trading like crap, I'm trying to just get out of a trade for a tick or two. I'm not going to make a living with one or two tick winners. What I try to do is foul tip off pitches until I could catch the bigger move. But I'm not competing with trying to buy 99 evens right now with any kind of high frequency. They're going to be gone. And if 99 evens are going to be bought by HFTs, I ain't going to have a chance to get them. Sometimes with the news, it moves because algorithms move the news or move the market before the news were to come out, before we see them. But there's ways to get it before a lot of retail guys are used to getting it with a news service, and you still see the market move, then the news come out. That's why it's important to know where the market was right before the news come out, because if it is bearish, generally it'll use that as ground zero to test it, or you're not that far away and it's a pretty bearish piece of news, you can still sell it. So you can get away with competing again. I would never advise competing with them or try to, because they're in it for a different reason. But the market is supposed to go up 10 or 20 points. It will. I think looking for a tick or two in a scalper's view is only good to manage your risk when you're not trading well and you're getting out looking for that bigger move. It's like baseball, foul tipping until you can get a pitch you can handle. But to think you're going to make a living out of just one or two tick winners ain't going to happen. But you can also look for 10 or 20 point winners either. You're trying to catch a sweet spot of an area you could get where if the area isn't violated, you're still in the trade. If you just play for one or two ticks like HFTs, you're going to get killed. But if you're only risking one or two ticks, like I'm going to start this trade by just risking one tick. I might take a one tick loser, but I didn't get into it just looking to say I'm going to buy 99 halves and then sell 99 quarters if I'm wrong. That ain't going to work. You got to trade areas and not prices, so you're not competing with those kinds of HFTs or algorithms that are much faster than you and I ever will be.
That's great. That's an awesome answer. All I have to add is I think algorithms help us. You have to remember in the business, whenever there's algorithms, there's actually algorithms trained to work against those algorithms. So they kind of flush themselves out. There are algos in the market, and we have to deal with it. And at the end of the day, they get paid when we do as well. So if you just stick with the trend, do the proper analysis, they actually help you. They help the trend play out faster. And there was more predatory action before. We still see it on a daily basis. And I can tell you that it's not a deterrent from entering the industry or being successful at it. It doesn't hurt you. It actually helps you.
There's going to be less and less, I think, with these micros that are coming along. They're creating more benefit and profits for the exchanges to just take off anything that's predatory, level the playing field, create speed bumps. And so whether you're in Toronto, Canada, or Chicago, or Atlanta, or Florida, you both click the mouse at the same exact time. Obviously, you can't be on a dial-up connection and have the same thing. But if everybody has normal speed, that order would get to the exchange at the same time, and those speed bumps would make it a level playing field. I think that's where the business is heading. And as it's heading that way, it becomes more and more opportunistic.
Awesome, man. Another question here. Are we self-taught or professionally trained? This is interesting because I think there's only one way to learn how to trade. I think people could teach you the concepts, but the only way to learn, the only true teacher is the market. There isn't any one person that could give you their strategy, say, here's what I do, now go make $1 million with it. I think you have to learn the way the market works, the dynamics, the mechanics of it, what to look for, how to manage risk. That you can be taught, but I think for you to be successful, you can't be taught. It's a method of self-application. You got to put in the time. And unfortunately, and actually fortunately, there's going to be a patch where it's a little more challenging. And that to me is a rite of passage. I don't know one single trader that started and from day one was profitable. All right. And that's the important part, is that the trials and tribulations are part of this journey. It's to be expected, and you just have to appreciate it. So that's my opinion on it. Great. How'd you do that so fast? Damn, bro. Another question. HF, yeah. High frequency drawing, HFD.
Right.
Another question is, somebody wants your.
It's become so beautiful.
Yeah, whoever said that, send you love.
Give him the heart tap.
Like yeah, that driver. Another question. Somebody wants you to explain. Maurizio, not here, man. This is YouTube. It's not. We'll talk about that later. I want your method. That's okay. What markets or assets do you trade, Anthony? That's for you.
Wait, let me read it. Where is it?
What markets or assets do you trade?
Futures, number one. So when you say assets, I think stocks or options. I trade futures. And who is this that answered this? Chris?
Chris.
S&P.
Chris came to the boot camp last week. He's awesome.
Nice. S&Ps. I watch almost all of them, but I'll trade S&Ps, some bonds during FOMC or when the central bank is doing stuff. But mostly those. Will I put something on in the NASDAQ from time to time? Yes. But as far as trading, it's the S&Ps, a little bit of the bonds during the central bank time. And then once in a while on the NASDAQ, if I feel like it's got more of a breakout opportunity than the SPOOs do. When the SPOOs is slang for S&Ps, or the ES. It used to be called the SPOOs when it was just on the floor before it became an E-mini contract. And let me tell you guys, this is kind of cool. 2 trading floors years ago in the 90s at the CME before electronic trading. And they introduced the E-minis. And it was like grandstands. If you think of like a little league baseball field, you know how you got grandstands. And in those grandstands were little monitors with these E-mini contracts. And they had like a ceremony to ring the bell. And everybody was laughing at it. And there were only a few spots that were actually taken. There were a lot of empty terminals. And we were on the upper trading floor, which is above the lower trading floor where the SPOOs and the S&Ps are traded. And they had the big screen TV. And on the floor, we're all watching them ring the bell, laughing. It's not going to happen. Look at all the empty spots, right? And the E-minis were introduced, and there was a 1 lot on the offer and a 2 lot on the bid. It was thinner than the micro contracts were in May when they were introduced, these E-mini contracts. By the time a couple months go by, they got thicker. Those grandstands were packed. They were able to trade on the best edge of all, and that is leader lag, in a real, you still kind of had to have the skill to trade, but they were able to watch the big pit, literally see a big order come in from Merrill Lynch, and then just buy the offer in the S&Ps. That order hits the pit, and the S&Ps go up. Now, was it that easy? And you still had to have skill to manage your risk, but it was easier. So when people are looking for edges and advantages, they often go down the path that doesn't include any kind of potential lead lag. Now, lead lag isn't that easy, and it doesn't exist between two markets all the time, but it does exist. And not just the relationship between news and the product, but the product and another market. So when I'm asked, what do you trade? It's not only what do I trade, but what do you watch? So if when the yen goes down, the S&Ps go up. Sometimes the S&Ps lead the yen in the other direction. I'll miss an S&P rally. I take a shot and sell the yen and it goes down. I don't feel lucky. The yen followed the strength in equities. I don't want to get into the carry trade and why it's risk aversion, but the yen currency will go down when global equity markets go up. So it's a big rally here. I could buy the yen without even looking at a chart. I guarantee the yen rallied after those comments about China, right?
Yeah, it's right
Pull one in.
It's right here. The yen. I can show you guys if you want. Hang on. I have to unclip the
What
camera.
color is the yen?
The yen's the red. So here's the charts that we're looking at. By the way, here's the office. Vicky's over here working. Azalea went somewhere. This is where we're sitting and answering your questions. Here's you guys, you beautiful people, ask questions. This is the yen right here. The red line.
Blow it up. The chart.
Hang on, I can't see the mouse. Control Shift. You want to hit X there on the keyboard?
The letter X?
Yeah. There you go. So this is, however, this is the dollar. The green is the dollar. The red's the yen. So you can see the dollar dived. This is the news right here, the yen popping.
The yen went from here to here on that news.
Yeah.
As the equity market's in green. Is that the S&P?
No, it's a US dollar.
All right. Well, you don't have the S&Ps up here? These are all currencies?
Yeah.
Either way, you got the risk aversion currencies shot straight up, the yen. So if you couldn't catch the ES, but you had a yen dome up and you took a shot, bought some yen, I mean, do you want to sell the yen? Of course not. You know what to do, and you could have assumed accurately that was the direction based on what? Relationships. You throw them all together. You had a relationship between the news and a market, between a market and a market, and you had the relationship of maybe some sellers that came in that were going to get laughed at, right? That's order flow. Don't be the guy that's saying, why did this happen? What happened? The more you have to say, why did this happen? What that means, the less informed you are, and you're more or less the prey. My dad told my brothers and I'm the youngest 8 kids, he said, if you know how, yeah, you might have a job. If you know why, you'll be the boss. Know why the F you're doing things. And he didn't have that correlation to trading, but I made it, because if you don't know why price is doing what it's doing, you're never going to know how. And I didn't know why it was doing what it was doing when I was a pit trader. I knew why right away from the group I was around. That's what stripped randomness out and helped answer a lot of the questions you guys are asking of what product to choose, of how to manage your risk, or how to get into that flow and consistency so it doesn't feel like a good guess. How you know you're on the right path? Know the why things happen. You know, when I know why my wife says certain things, I don't take offense to it. When she gets mad at me, sometimes, this is what I figured out about my wife. When she gets mad at me, 100% of the time she was right at getting mad at me. I did something 100% of the time wrong. Now, when I get mad at her, I'm about 30% right. I had 30% real reason to get mad at her, right? Most of the time I'm in that 70%.
What if she's watching this? Now you're screwed.
Well, sometimes I'll get mad at her for getting mad at me, because I thought there was only a 10% chance of her actually having a reason to get mad at me, but she was 100%. So then I was in that 70% of getting mad at her for no real reason. And that's how things work. But you got to know why. If you know why, we got a great marriage. If she's half as happy with me as I am with her, she's happy.
That's really nice.
Thank you.
Also, your dad sounds like a very wise guy. We should have had him here instead of.
He's still alive. He's still kicking in the Chicago. My parents are older in their upper 80s, but they're still moving and grooving.
All right, thanks. Tarek keeps asking about predatory action. Can you specifically explain how you technically recognize predatory action? I can tell you what's predatory, Tarek. What do you consider predatory? You are sweating. Me too. It's getting hot in here. I can tell you one thing.
It's these monitors too, but
yeah,
you and I are together.
It's too much energy in one room.
Go with your predatory answer, because I got one.
All right. So for me, predatory, to specific example, Tarek, because I think Drager's going to touch a little bit more on how it forms, but I'll give you a specific example. So something called spoofing. Have you heard of that? What you want to see is on the ladder where you're looking at your bids and offers. One of the biggest predatory actions is spoofing, but they've eliminated a lot of that from the exchange. But what they would do is, let's say a market at the moment's trading 0.2 even. So somebody throws in a 2,000 lot sell order at 3/4, right? Which is what the market participants see that and say, wow, the market's probably going to sell off. There's a huge seller above. The market's going to go down. So everyone gets scared and sells out of it, drops down to 99. They lift the sell offer and really bought the market. So they scared it lower to get a lower fill. That's one example of it. Now, you could see that on the DOM, but can you prove it? That's a whole other thing. There's a website called Nadex that really publishes this information. It's also the percentage of filled orders versus canceled. There's ways to look at it, but I'll tell you this, it doesn't really help you. It doesn't help you to understand that information to be profitable. What you want to look at is whether the limit on the ladder is to sell, whether it's a spoof or it's a real one, it doesn't matter because the action is the same. And if we do scare the market to the downside, you have an earlier indication by knowing that there were sell stops there anyways. So for me, I look at the market, I see some of it occasionally, but I don't really, it doesn't affect me. There's still profitable opportunities for me regardless of that. That's just me. That's predatory behavior.
Now, I think that predatory behavior is what you want to try to emulate. Now, they might have inside information, like they know where the stops are. How? If I knew, I'd try working towards that. So you know,
that's illegal.
Concrete, right? You know, from a concrete vantage point where all these stops are, then you could trade with your feet. The other way is there's, and I think they've gotten rid of this, but they were called latency loopholes, where a firm, not any firm I ever worked for, not a true prop firm, but a trading firm, would have the information of orders that come in and out of the market loop through their servers and then go to the exchange. And it's like, wow. And it was just milliseconds, but that's a lifetime when it's the information of orders that are coming to the market. That's that racing to front run, which has always been illegal. So when you have predatory stuff that goes after where stops are and that can front run orders, you got to get rid of it. And so a book by Michael, I think, I don't know who did it. I think
Michael
that
Lewis, Flashboy.
Now he's a crusader on everything he writes a book on, then he forgets about it, right? So to me, if he's truly a crusader about something, you stay on it or with it. I think that stuff is more in stocks, which when you have all these what are they called? Bats, ARCA. What are those called again? Why can't I remember?
The alternative ATS?
No. What are they called?
I missed
you guys
the
don't
first
know.
part.
Bats, ARCA, those are why can't I think of this? Either way, they're like all little mini platforms where people are putting orders in, and they were having
dark pools.
No, they were having HFTs front run them and things like that. But think about predatory.
That's for the stock market, though.
Right. That's what I'm saying. Yeah. That's where that book was written more towards NYSE and stocks. But the whole point of anything predatory is to, like, self-fulfilling prophecy will have stop orders get cleared if there's enough of them. Like I just explained in that earlier question, there's enough sell stops, it becomes a self-fulfilling prophecy to fill them, and a magnet. Why? A lot of sell stops here. It means there's a lot of sell stops somewhere attached to them, and that's pressure that clears them out. Then it could go up. So if they knew where sell stops were, they'll go get them, and then the market could release. So those are ways that I'm speculating, but those are ways that you can have predatory algorithms if you had information before most of the rest of the world. I think the exchanges, CFTC is what regulates the futures exchange. The SEC regulates the stock industry. I think they're doing a better job catching up to technology, because technology is fairly new as far as when it comes to trading, and they're always behind regulating the advancement of technology. And they've gotten a lot better to, like George said, eliminate spoofing, and then, like I'm saying, trying to create speed bumps so everyone has the same chance at getting 0.2 even in the S&P if I click in Chicago or he clicks in Atlanta.
Yeah, and even if you find something to exploit, first of all, it's illegal to do most of the stuff. They do it on size. They'll catch 1 or 2 ticks on really big size. So to us, I mean, to me as a trader, it doesn't really worry me as long as it doesn't get predatory to the point to take away from us. But I think it adds liquidity and helps. But yeah, good reading on this is Flash Boys by Michael Lewis. I agree with you on the Crusader part. But you know, it's a great book.
Selling books.
Yeah.
So he's a crusader on whatever his last book, and that's fine. Whatever. Why'd you have to delete those? Someone saying something smart?
It was offensive. No, he spelt a word one letter at a time. He got booted. That's okay.
So knucklehead. He lives with his mommy, and he's on his basement. He's got potato chip dust on his chest because he watches YouTube videos and deludes him. His wife hates him, and she's probably ugly.
We send them love, joy, and happiness.
Yeah. After that,
price action manipulation, capital. Thank you guys. You're welcome, Tarek. Thank you for the great questions. What else you got? We've been going for a while, almost an hour.
What did he write? I want to know. I'm hung up on this guy. I want to find him. Oh, that's terrible.
Yeah, I know. It's
what a jerk. There's a lot of haters out there.
Hey, you know what? You need people like that. I love people that come on YouTube and leave negative comments because it helps. It's engagement. And you know what? I also think of those people as somebody who maybe they mean well, right? A lot of people, everyone means well. They just couldn't figure it out. Now they're mad at the industry. I get it. It's fine. But the best way to do it, just to shrug it off, keep moving forward. I see a lot more love than anything else.
Triggerisms to write down. Jeremy, if you're short, tell your wife to wear heels. You know, if you know how, you have a job. If you know why, you'll be the boss. Know where you're getting out before you get in. There's another one that I can't think of. This is kind of.
Did you say the heels one? Yeah, you did.
Yeah, I just said that.
It's my favorite one.
Thank you. But you caught me on, and you kind of put me on the spot. But I'm going to tell you that I'm talking here in Toronto tomorrow afternoon. And even though you guys can't make it, obviously, unless you're local, register to what this money show puts on because they do have some good speakers in the future. But register to, can we give them that link in here?
Yeah, we can. Yeah. You want me to?
Yeah, put that link that I emailed you, though. Register to this link. Take the time to do it. It's not, I would never have you sign up to something that's going to send you crap. It's got good information. They have a convention all over the country, all over the world. I think they go to London and Paris, but it's not a Mickey Mouse organization. They actually bring some really good speakers together. Hell, they're bringing me to Toronto. No, but they have a good collection of stuff. And while there's some speakers that are knuckleheads, I get it. They do have some good. It's worth registering for and keeping up to date when the next show is. But
I don't have it. Can you send it to me again, and I'll answer a few questions if you want?
Yeah,
I thought I had it.
Well, actually, I sent it to. Now everybody left. I sent it yesterday, not today.
Through email or text?
Yeah.
From what email? Don't tell me that.
All right. Did you get that email I sent with the link on it to register to that lunchroom? Did you forward it to?
I'm gonna put on the.
I could see myself in the profile. I don't like it.
Do you guys have any other questions?
Wait, I do. I want to finish up on one thing with this whole money shot. The whole key to learning anything is not to stop, but also to make sure nothing is basic when it's the right basic stuff. The right basic stuff is also the advanced stuff. So I used to assume people knew stuff that they had no idea about, like correlations with other markets, like reading flow, like the difference between a bid or offer, or aggressive buyers, as George mentioned, versus passive buyers. Things that are not, they're very basic for people who know what they're doing, and they're not, people never get themselves not only in a position to learn it and learn it the right way, but to develop it. Not just learn it, forget about it. And they usually find guys like George and I at the back of the store, and because we're not we're not guys with the flashing bulbs standing out in front of our cars and houses and saying, pay this, buy this, and you'll become, you'll be able to drive this car and that car. We don't believe in that. And the people who do that obviously get people, or the indicator guys who sell bright lights to red, green arrow stuff. That stuff will always sell first, and it's not people's fault for buying it. Hell, I might have bought it had I not luckily got started the right way in the exchanges and then a prop firm. But in this day and age of the internet, there's a lot, you don't know what you don't know. So you want to be informed on the basic stuff and develop the basic stuff, because the value of price will always be developed, predicted, and traded and accurately assigned proper value by comparing it to something else. Like that guy in there, if there wasn't idiots, you wouldn't know that, you could compare it against nice people. You have to have ugly people to have good looking people. You got to be able to compare and contrast. It's really important. I wouldn't look like I do if George wouldn't stand next to me, right? If he was a Calvin Klein model, at 25 years old, I wouldn't look as good, from the waist up.
I'm just in my model pose. I tried. Is there a way to get real-time open interest for ES? That's volume, right? Open interest for ES. Open interest is an options term. And are you looking for ES options, open interest, or ES? You're an options trader, aren't you? I love this quote by Craig. I think he said it before. Get this one, Anthony. He said, "Better to be out of a trade wishing you were in than to be in a trade wishing you were out."
Very good. Yeah.
It's beauties. Love it, Craig.
Craig, good job. Craig asked about the event in Toronto is annual, but they have events around the country in different cities all throughout the year. So register to that form and it'll give you information about, and they don't beat you up with emails. I wouldn't have you guys register to something that did that, but take the time to register to it. And I'll share with people that register an audio copy of this presentation, at least an audio copy, maybe video of the presentation tomorrow. I'll share it during next week, but register to it if you get a chance.
Yeah.
George's going to be there with me doing some AV stuff, right?
I'm going to be helping him out.
You're going to clap and laugh at my jokes?
Well, maybe. We'll see. If they're funny.
I told you the one you laughed.
That's true. But now I won't the second time. You shouldn't have told him.
No, you will.
Any good info on a trading squawk or being the first to get the news? Yeah, great trading squawk is Trade the News. Our Trade Pro members actually have a monthly discount to it. And yeah, that's News Squawk that we use. I can show you what it looks like. And then you look at the chart, because I didn't actually see this in real time, but the Donald Trump news came out at 12:25, and it said the following: President Trump doesn't think we need a U.S.-China trade deal before the U.S., blah, blah, 12:25. It comes out early enough to get you an advantage, and I know a lot of prop firms use this still to this day. The competitor is Rand Squawk. That's another option as well.
Donald asked about trading the Dow. I grew up trading, not grew up, when I traded on the floor, it was a Dow Futures pit. So I watch it, but I don't trade it. I think it's a good, it's $5 a tick. I think, though, if you're looking to start trading, trade the E-mini micros, look at the Dow micros. But if you trade the Dow minis, I think that stay in it. It's a liquid enough market to trade, but watch the other answers, the NASDAQ, the ES, the yen, some of the inverted markets. Make sure you're watching more than just what you're looking to trade. But personally, I watch it, but I don't trade it.
Awesome. All right, guys. I put the link into Drager's conference tomorrow. Excuse me. It's going to be in the Toronto Metro Convention Center. Come out if you can. We'll be there. Our whole team supporting it. And what else? I mean, thank you for the great questions. I'll tell you this: the people who work hard and keep their mind in the right place, stay positive, are the ones who succeed. And this is big for you guys to be here, to ask questions, participate, taking time out of your Fridays. You could easily be at the bar. In fact, some of you probably are at the bar at the moment, but you've taken time out of your schedule to be here, and that's a really big, important step. Appreciate you guys.
If you want to get better at anything, ask good questions. You have genuine interest in the answer. I feel like people aren't interested in other people, and therefore they don't ask good. You only get information by asking good questions. And so if I want to get on better terms with my wife, ask her a couple questions. How you doing today, honey? It works.
Then you got to be prepared to listen to the answer too. So be a good listener. I appreciate you guys. Send you love, joy, and happiness. Drager, thank you for coming out and being on the channel.
Is that what you always say? Send love, joy, and happiness?
Yeah.
I got to come up with something like that. I like that.
Yeah. It's
got a warm, fuzzy feeling when you said that.
I send you love, joy, and happiness.
How about laugh, learn, trade? That's what I say.
That's good too.
All right.
But I send you love, joy, and happiness. Thank you for being here, Drager. We're going to head over to the conference today, scope out the venue. See you guys tomorrow, whoever's coming. Appreciate you all. And I think if you guys have any more questions, you can interact with us on YouTube all the time. Drager's got a YouTube channel too, Edge Trading Group.
Edge Trading Group on YouTube if you got more questions, or Anthony at edgetradinggroup.com if you want to email. But register to that thing, you'll get a nice audio, and I think you guys will kind of get what what you're looking for and even more. So it's always a pleasure doing anything with George. So thanks, guys. Have a great weekend.
Thanks, Traeger. I was looking to get a beer out of the fridge because the day's done, but these guys drank it all. So I'm going to get some more water. You guys have a great weekend. Over and out. We'll see you on Monday for morning market update. For Trade Pro members, see you Sunday for Market Analysis Live at 8 p.m. Eastern. Tune in. We got some great stuff coming. Enjoy the rest of the day. We're spoiled with some volatility here from Trump, but I think we're going to grind out to a slower. Actually, we have in this last hour, expect a lot of volatility. This is a quad witch hour. Be careful out there. You guys take care. Have a great weekend. Appreciate you all. And catch you later. Goodbye. Tarek, I'll answer that one next time. Come out on Monday at 9 a.m. Ask that question. I'll give you some insight on it.
And don't
Take care.
use combination shampoo or conditioner. It doesn't work. There's no such thing.
Don't slander them.
You don't have to condition your hair, but don't think you are by using shampoo with it. And I say this because I was at an Airbnb that I'm staying at, and she put shampoo conditioner. I was offended. That doesn't work.
Is that how your hair looks so great? Yeah. All right, guys. Take care. Bye.